Imagine waking up to the news that some Chinese company made a better AI app, and because of that, the US stock market lost almost $2 trillion. Sounds very scary, I know, but also this is something that does not happen all the time. But here's the good news. Big market dips like these, oftentimes, a lot of times, means a big discount for you to buy great and very safe assets. I honestly would not even put it past the fact that a lot of very wealthy individuals, people that control the markets, let's say, probably pre-planned this to just have a good advantage to buy these safe stocks. So in today's video, we're going to talk about 4 stocks that I think you should get into right now. These stocks are extremely safe and they have the potential of making you good money because they're discounted by 20 to 30%. And I want you to stay until the end of the video because the 4th stock that I have on this list is something that I'm sure a lot of you do not even know about, but it also is an asset that has the potential of doing the best out of these 4 that I have on the list. So ladies and gents, without any further ado, let's go ahead and get started with the first item on the list. With the first item on our list being, obviously, I'm sure you probably guessed it, Nvidia. Nvidia took the biggest loss. It dropped almost $400 billion, thinking that DeepSeek AI would be a competitor. And they're right, DeepSeek AI is a competitor. And because of that, the stock plummeted about 20%, which is a lot for Nvidia. But why do I think Nvidia is a good buy? I honestly don't even need to go into this, but let's just break it down. We all know that Nvidia makes the most powerful chips that AI systems like ChatGPT use to be able to function. And also, if you've done any research on DeepSeek as well, we know that DeepSeek also uses Nvidia's chips for them to be able to function as well. So companies like Google, ChatGPT, OpenAI, Meta, all of these big trillion-dollar companies needing Nvidia's chips, I don't think Nvidia is going to go anywhere. I don't think that their stock is going to continue to plummet. I think this is just a great time for you to enter and purchase the stock for a discount. But beyond that, Nvidia also introduced their B100 processor, which is a more efficient chip that uses less energy. It processes data a lot faster, which can then in turn translate to running AI models a lot more efficiently. With the bottom line being that Nvidia is like, you can think of it as a pillar, a structure that holds this whole AI ecosystem. Doesn't matter if it's in China, it doesn't matter if it's in Germany or if it's in the US, everyone is going to need Nvidia's chips or Nvidia's technology to be able to run these AI models, to be able to use it for that AI ecosystem. So Nvidia is going to be your first choice. It's going to be a stock that you should buy right now if it is discounted. All right, at the current shooting of this video, at the current moment, Nvidia is trading at $124. It plummeted, right? It was around 148, plummeted at 21%. So right off, looking at the technical analysis, we see that there's a major gap. And a lot of times, again, if you've seen anything regarding technical analysis, you know that gaps fill. More than likely, Nvidia is going to have to refill this $141 gap. So there's a high probability Nvidia is going to go back up to that $141 to fill that gap. So it is a great buy. So again, a great buying opportunity for you would be around this $120 range. And I don't know when you're going to watch this video. So if you're watching it, it's gone back up, then, probably not a great time for you to buy because at that point, it would have been too late for you. But yeah, great buying opportunity would be around the $118, $119 range. And then hopefully it's going to bounce back up to fill that gap at $141, giving you about a 20% gain on your money. So yeah, with that being said, Nvidia, I believe, is going to be a pillar, a structure that's going to hold this whole AI ecosystem in place. And a lot of these companies do need Nvidia, so a great asset. The second stock on this list is also a stock that you probably already guessed, Microsoft. Microsoft plummeted about 20% as well, but obviously Microsoft, I don't think it's gonna continue plummeting. Microsoft's not gonna go down. They're gonna rebound back to what they used to trade at. Microsoft owns Azure, a cloud service that powers all of these AI apps that you and I use on a daily basis, including ChatGPT. Microsoft's also introducing AI to a lot of these applications that people use on a daily basis for work, for school, etc. Like Windows, the Microsoft Office suite, LinkedIn, a lot of these applications that you use on a daily basis. And I don't think that DeepSeek is going to cause any sort of a major competition because Microsoft and DeepSeek in general offer 2 different types of tools for your everyday use. So to now go further into why Microsoft's a great buy, because obviously they're going to rebound back. Let's go ahead and look at where it is a good buy for you because again, I'm not sure when you're gonna watch this video. At the time of the recording of this video, Microsoft's currently trading at $418. And again, just like Nvidia, we're seeing gaps that need to be filled at around $441. So a good buy for you would be around this $413 region. That's where it seems like it's bouncing back. So we see a bounce here, again here, and then looks like again here. So a great buy for you would be around the 414 to $418 mark, and most likely to fill that gap, it's probably going to bounce back to around the 440 range, giving you a 6% return on your investment, which again, it's a no-brainer buy. All right, the third item on the list, I'm kind of going through this list quickly because honestly, I want you to get in on these assets quickly without losing any time. So it's going to be a very quick, straight to the point video. The third item on the list is going to be Broadcom with the ticker AVGO, and Broadcom stock price dropped as well, facing that same market pressure. And why is Broadcom a good buy? So Broadcom designs and manufactures critical semiconductor components that you need for AI and cloud computing to function efficiently and smoothly. Its chips are used in data centers, networking equipment, and other high-speed connectivity solutions that you need AI to function properly. So although DeepSeek kind of taught us that we don't really need huge data centers to be able to run a software like DeepSeek or like ChatGPT, because initially these AI companies were like, hey, we need a lot of big data centers. AI uses a lot of data, and we need all of this space and all this technology to be able to run efficiently. And then DeepSeek kind of comes out of the background. They're like, hey guys, we're able to do this and with way less power, with way less chips, and we're kind of efficient. We can do this without all of that processing power. But at the same time, this doesn't mean that the AI ecosystem is not gonna upgrade, it's not going to grow, right? And it doesn't mean that essentially at a future date, we are going to need data centers to be able to run AI tools efficiently. And Broadcom being one of the leading companies that kind of supports these data centers with their chips, I think it's going to be a great buy, and I think it's going to be a great bounce. With that being said, let's go ahead and take a look at the technical analysis for Broadcom. So it looks like Broadcom is already bouncing a little bit, right? We have gaps on both sides, on the upper side at 242, and then on the downside at $206. So currently it is a good buy. I would just have a risk management strategy at about, let's say 2%. It's probably gonna bounce back. If it bounces back below this bottom at $211, sell right back. And then another great buy would be at around the 206 region. So you could buy right now, risk management at around 211, or buy it, be safe, and buy it at around $206 range. And it has the potential of getting you almost 20% return on your investment. So AVGO is a good buy. All right, the fourth item on the list, the fourth stock on the list, is one that I'm sure not a lot of you knew about, and I think this one has the potential of not only going back to what it was trading at, but also surpassing it, because this company is one of the most essential energy suppliers between the US and Canada. And the company is Kinder Morgan. The ticker is KMI. And again, they're one of the largest energy infrastructure companies between the US and Canada, moving things like natural gases, oils, and refined products pipelines between the US and Canada. Essentially, I know that DeepSeek kind of provided this scare like, hey, we don't need a lot of energy to be able to run an AI tool like DeepSeek or like ChatGPT, where essentially we thought we're going to need a lot of energy, a lot of data centers. In reality, it is true. They kind of showcase to us that we don't need all this energy. But at the same time, just like I said before, the AI environment, their ecosystem, it's only going to grow. We're not going to stay stagnant. We're not going to be at a point where we use less and less energy. With more growth, we would need more energy. We would need more data centers. And all these data centers need energy to be able to function, and we need it for power. And at this point, we're not at a position, or even in the near future, we're not going to be in a position where, renewable energy is going to allow us to be able to function properly, or, be able to run these data centers properly without having access to these natural gas-fired power plants to provide us this energy that we need. So yes, Kinder Morgan is necessary, although I would love to get to a point where we use renewable energy. But at this point in our, civilization, we still need companies like Kinder Morgan. All right, let's go ahead and take a look at the technical analysis and see where KMI is a good buy. So right now, KMI is trading at $28.17. And I think a good buy would be right now as well. You want to risk, again, 2 to 3% below the $27 mark. So if it drops 2 to 3%, anywhere between $26 and $25 you want to sell. But again, I think this has the potential of going back, rebounding back to where it used to trade at, around $30, and even surpassing that, because we would need the access to having, a good energy source. Ladies and gents, just want to make a quick and to the point video on these 4 great and safe assets for you to buy. And again, be mindful of the fact that depending on when you watch this video, it might not be a great investment for you to purchase these stocks. So make sure that you guys follow exactly where I tell you a good position would be to take on these assets. With all that being said, I'm rooting for you guys and I'm hoping that you guys take advantage and make some money alongside myself on this 20-30% discount that we're getting in the stock market right now on these great assets. See you guys in the next video. Peace.